Hey everybody, I'm Ruben with AR Title Trades, and today I have something special for the audience. I just funded a trading account with $1,000, and the reason I said that I did this for you is so that you can follow along for the entire year of 2025. I'm going to document every single one of my trades into an Excel spreadsheet. It's going to have my entire risk management plan on there so that you can see the profits and the losses, what it looks like on a quarterly basis, and what it looks like on an annual basis. This is going to help you make your money scalable. This is going to show you how much you should be starting with, or if you should be starting at all, to be quite honest. This was something that made it available for me to understand the emotional side of things and to help me on the psychological aspect of detaching myself from my money, was understanding that it's a numbers game. And I want to steer you away from this get rich quick thing. You know, it's not how it works. Just like anything that you want to be great at, it's going to require hard work. It requires discipline and dedication, and you have to be consistent with it. That's whenever the results come, is whenever you have a large amount of usable data to be able to throw into a metric system. And then you can really scale everything and identify where your issues are, your bottlenecks, or being able to determine which areas you're good at, you know, and this is how you start developing your trade style. And so once you get that trade sense in lock, then you can start applying it and creating your own strategies and then building that around your tolerance with your risk management. So today I'm going to show you exactly what it is that I do with the trade. I put the $1,000 into the account, and the first trade has already been executed, so we are on trade one today. This trade was executed February 17th. Today is February the 20th, 2025. And I'm going to show you exactly what it was that I was looking at. The first thing that I'm going to tell you is support and resistance is the song I will be singing for the entire time that you follow AR Title Trades. Once you understand these two fundamental things, you're always going to know where the market's headed, and you're always going to know where it's coming back to. And if you understand those two things, it's going to help you whenever you're understanding the three different types of trade styles that you have. There's only three ways that a market moves whenever you're trading. There's only three different market conditions. You have where it's continuation, you have a breakout, and you have reversals. And those three things, you're never going to see any other instances of that. Consolidations are just waiting periods, but inside of a consolidation, you're basically bouncing between two levels of support and resistance, and there's all kinds of advantage that can be taken there. So let's go ahead and start at the first thing I'm looking at. I go to the day chart. I then find my strong support and resistance lines. I like moving to the line chart because what that's doing is it's filtering out the candlesticks so that we're in a position where it only shows us the bodies of the candlestick. And what that means is that that's the area where price closed or where price opened. That's where the bodies are at. And then you have wicks is where it reached but wasn't able to hold that position. So what I do is I draw a line at the most close to current price, and remember I took the trade on the 17th, so this looks like it's already above, and that's because I'm in profit which is good for this video. It keeps you here, but no, seriously, what I do is I look at the most recent areas between the areas that I'm trading at. And so there's another area right here. So those are the four lines that I'm most interested in, and it's pretty quick, right? And so what I looked for was just the peaks, the most recent peaks from where price is, and that's this dotted line right here. The one that's got the little radar or the sonar bouncing off of it, that's the live trade that's happening. So we have 1, 2 resistance lines and 1, 2 support lines. And then I move down to the 4-hour and I get our candlesticks back. And so inside of this area, this is what I was talking about when a market can look like it's consolidated. It's just been ping-ponging in between this area, right? And so what happens here is you're either going to have your breakout or you're going to have your reversal. Now, depending on how long this is going to go, that's why I use the daytime, because the daytime showed me that it's bouncing from a support level. That means that there's more data crammed into one candlestick whenever I'm on the day chart. When I move down to the 4-hour, now just think about it. How many 4-hour increments are going to make that day? That's how many candlesticks are involved inside of that one day chart candle, sorry. And so inside of this chart right now on the 4-hour, what I was looking at was it bounced from support on the day chart, and then it did one of my favorite things, and it gave me at least 3 candlestick pullback, and it gave us 4 actually, and then a candle that ate the previous, going in the opposite direction. So this is the area that I took my trade. And so what I ended up doing was setting up my targets And my stop loss, I use an ATR. We can go into detail on that. I can talk about every single indicator. I don't think I have enough time to do that here though. But I use my average true range, and what that does is it calculates the volatility of the market so that my stop loss actually has meaning behind it. And so what ended up happening is I set my stop loss, and I'm just going to use my stop loss that I already have marked here as the point, and then you have my take profit up here, which again was already set because this trade's already been drawn out. I've already executed. And so as mentioned before, I'm only trading with $1,000. I'm only willing to risk 2% per trade, and my profit's always going to be a 2-to-1 risk reward ratio. If you look at the RR ratio right here, it's a 2. That's showing that I am winning twice as much as I'm willing to lose. And so whenever I entered the market here on this engulfing candle, bouncing from a daytime support level, I'm expecting it to jump up to these resistance lines. Now, me going from a 2-to-1, that's based off of back testing, which again, that's a whole nother episode or a whole nother video that we'll make for you. But it's because I know that this strategy performs more times than it doesn't on a 2-to-1 risk reward. And I usually fall anywhere between a 72 to 80%, which is pretty high, but I've also been doing this for a while, and this is something I've tuned over a lot of years. Trust me, it was not that. I can't tell you how many times I've blown an account. It has happened. I am currently sitting at being a profitable trader overall. I've already made up all that debt, and right now you're going to get to do this with me for an entire year. So I hope you follow along. I hope you enjoy everything that we're going to be teaching, and we're going to do this on a monthly basis and on a quarterly basis, and then again on the annual basis of showing you all of the earnings that have come in. So again, that's the reason I entered this market. There's a lot more to it, but I hope you guys are learning something from this, and I hope you're excited about this. All right, y'all take care.